Hello and welcome back to my channel. I am Christy Vann with Fantastic Finances, and on this channel I teach velocity banking. But today I am going to be bringing on a special guest that you are going to be super excited to hear from. He actually started out in debt, used velocity banking through Fantastic Channel. He learned all he needed to know to really push him into bigger and better things. I'm going to let him tell you about it. But welcome, Brent. Thank you so much for coming today.
Thanks. I couldn't be more happy. I'm kind of excited about doing this.
Well, I'm excited to have you. So tell me a little bit about where you started. What was the foundational beginnings of you running into the channel?
So I worked in IT sales for 33 years and made fairly good money, I guess. I don't know. It's just like normal money, I guess. But as a salesperson, your income goes like this and it's very difficult to manage and all that stuff. I am 59 years old. And in 2016, I kind of got out of that working for large IT organizations. I worked for some Fortune 50 companies for a while or whatever, and started to go work for some startups, which is kind of typical in that industry. As you get older, it's like, let's go do something that's not, take all this knowledge that we learned over the years and go to work in smaller environments. But when I did that, I actually had $90,000 in credit card debt. This is in 2016.
Okay.
And at the time, I didn't have a resource like Fantastic or looking on the internet or YouTube specifically to find solutions and problems to whatever. So I just kind of talked to some people and realized that I needed, in order to not have to do debt service on that debt, which was pretty easy when I was working for those larger companies, I can't do that if I'm going to take a bigger risk and go work for these startups. So how do I get out of that? So what I ended up doing is I had a lot of money that had rolled into IRAs from all of those different people that I worked for, and I ended up just taking the money out of, I had enough money in the IRA, actually more than enough to cover that debt. And I realized that it was silly for me making 5 to 6% in my IRA and versus paying the 20% or whatever I was paying on the credit cards, and I couldn't really service that debt anymore. And I wasn't using velocity banking. I was literally using the fill up your checking account and pull it down, and fill up your checking account and put it down. And as a sales guy in those large organizations, sometimes I would make all the money that I make in a year, 60, 70% of it might be in a single quarter because of the way the sales cycles went. So it's always hard for me to deal with that, even if, you have these numbers that could be larger than what typically you see in the people you work with on your channel. And that happens. It's similar. We both know Brent Kessler, and he'll say that when he started a process similar to this, he started at $900,000 in debt. Kind of doesn't matter where you are, whether that's $9,000 in debt, $90,000 in debt like me, or $900,000 in debt like it was with Brent. So anyway, I ended up taking that money out and paid the penalty and the taxes, paid off all of those cards, got that to zero. And then from 2016 until 2020, just got the discipline of being able to say, okay, how do we live in a strict cash flow model, as I was doing these other ventures and things that I was doing and getting that practice down, but still being frustrated, going, this doesn't work. Life happens, things happens. It's very difficult. This fill up the bucket and then get it down and feel like this doesn't work. So in October of 2022, I had just had lunch with a childhood friend, a guy I've been friends with since we were 7 years old. And interesting face story between the two of us, but we had talked about some things, life stuff, and had prayed a little bit. Got back to the car, got in the car and just started praying and said, okay, what do you want, God? This doesn't feel quite right where I am right now, but I feel I need to ask you this. And he came back and he said, you need to be a better steward. And I'm like, well, okay, what does that mean? And he's like, very clear. There's two things: better steward with your physical well-being and your health, your fitness, because I have plans for you. And at the time I was like 57 years old or whatever. And I'm like, that's interesting. What do you really mean by that? And you need to be a better steward of your finances. And I didn't really understood what that meant either. So those two things I put on the plate, and I started with the fitness first, got on a fitness program. I've lost 60 pounds, which is pretty cool. Yeah, and I work with a trainer now twice a week, and I am in the best shape that I've ever been in, which is awesome. So I would tell people to do that. But I really didn't know what to do from a financial standpoint. I'm like, I'm kind of doing this thing, and yeah, I get $10,000 in credit card debt as I'm working up and down in my payment thing. But I really hate that when that would happen, just because, as you know, then it's like, okay, if I pay $1,000 a month extra, it's going to take me 10 months to pay this off, and it's just doesn't. I didn't know that. So I don't remember how your channel showed up. I'm going to say that it was divine, and the next day on YouTube, you showed up. or whether I actually put in a search in YouTube saying, how do you get out of debt? I don't remember, but I remember going to see your first video in like October and saw you do a velocity banking example, and I was able to get it right away. And I'm like, oh my gosh, huge light bulb. Why didn't anybody ever teach me this? Right. And so then I started to look at your other examples and really not only say to get out of debt, but to take it to a step farther and understand conceptually what the difference is between living life, building up your checking account versus starting your life and living your life in a pure, using your money in a velocity way with pure velocity banking. And that concept is what we need to, you and I talked about this before we got on. That should be taught to our children. That's how you should learn. So I'm like, okay, I'm going to try this. So I have credit cards. That was not a problem when I was doing cashback and all the other stuff. So I'm like, oh, I pick a card. So I started just use the card that had the largest open balance or available credit line on it for my debt tool. Started to do that for 3 months just to see if I understood it and if it worked. And that started to come down. And so then I'm like, typed into you, I'm like, Christy, I want to take your class. What should I do? What's the first thing? And you were real busy. And you're like, the first time I can do like an hour session with you. I think we did like a half an hour session. And to get into your little class, that's fine. But then you said the first thing you can do before we start that, if you want, go and see if you can qualify for a first lien HELOC. So you referred me to your resources. I got in touch with them, went through that process, and it took me a little bit longer to get my head around the concept of amortized interest versus simple interest, which I laugh now when I say that because now I'm like, oh, I can teach that. It's so easy. Yes, you want to go to simple interest. We got that and got into a first lien HELOC, and I had a fair amount of equity in my house, which was pretty cool, and started doing velocity banking inside that line. And obviously that a little bit of $10,000 of debt that I had was sucked right into that, and it went away and didn't have to deal with that anymore. It was gone. Right. But the whole concept of looking at velocity banking and in your monthly cash flow, and then it led to me thinking more about, oh, actually, if you have this line and there's enough space in it, you can actually start thinking about cash flow on an annual basis because you have that ability to float things through that line of credit. And what discounts can you get if you buy something annually? And I started to do all of that. So I was still watching your videos. And then one of your videos about this same time, you had Chris Noggle from the Money Multiplier on. And when he was on your show, he did a little quick, maybe 15-minute, whatever. And I felt, oh, who's this guy? He looks like Tony Robbins. I don't know if I want to deal with this at all. And I felt a very strong push or compelling message. I feel that was God's push to say, no, you need to listen to this guy. So I'm like, all right. I went over to his channel and watched his 90-minute video. And Chris teaches the concept of infinite banking. And I was able to understand that concept of infinite banking. That's a whole other segment, if you will. And got involved in infinite banking and integrated velocity banking and infinite banking together. They actually are cohesive. They interact with each other and they can work very, very well together. And Chris's team is really good because he understands the relationship between infinite banking and velocity banking. And infinite banking is a term that was coined by the late R. Nelson Ash in a book called Becoming Your Own Bank, which we would recommend that you take. And there are certain people who are certified in the infinite banking concept. And if you go to that website, you can find out who those people are, and they're great. Basically, they're using a specially designed and engineered whole life policy to act as a savings tool. And there's a way in your savings tool, instead of your savings account, to actually integrate that. And from a velocity banking standpoint, it actually can become an adjacent part of your debt tool, which is very cool. And then the last part of that is that team also owns a subsection, because once you have available cash, what do you do with that available cash? How do you invest that? What do you do? And they'll say that you need to invest it in something that you know, like, and understand, versus going into traditional investments through like a financial planner. Financial planners, by definition, can only tell you to invest in approved financial methods, if you will. And you're limited as to how much interest you can make. And it's actually in something that you don't really know, like, or understand. It's just these are the things you can choose from. You're kind of taking a risk. And I've never been a big fan of wanting to get into the market or whatever. I am a business guy, though, and I love to do business and things like that. So Chris's team has this thing called the Private Money Club, which you have talked about before. And the Private Money Club is actually a dating site for people who have available money to invest and people
Right.
who are looking for money to invest. And this thing is crazy. It's about, I think technically it's like 4 years old, but it's really come on in the last 18 to 24 months, and it's privatemoneyclub.com. You can go out there and find it yourself. But you're able to take that additional cash flow or that additional equity that you have in your HELOC, additional money that you might have in an IRA that you can move to a self-directed IRA, and put that into investment opportunities that are backed by actual collateral, like real estate, or in joint ventures and owning parts of companies that you're actually involved in. And those investments can pay anywhere from just without even looking beyond whatever, it's between 12 and 20% on an annual basis, and getting involved in those things which aren't as volatile as like the stock market or whatever. So that I've got in that. So if you look at the timeline there, I went from in October of 2022 being $10,000 in debt, kind of figuring out how to do this, to adopting velocity banking, infinite banking, into this like tool that I built, into private lending, where I'm making an additional revenue streams that are in excess of 20% per month. I won't tell you the exact number because people can't get into those opportunities, but it's significant.
Right.
And very exciting. And then, like we were talking about before, kind of my passion is to work with young people to say this concept of retirement is kind of an abstract concept, not abstract. It's a concept that's put in place here in the United States that says, okay, we're going to work toward retirement at 65. And we ask, well, why do you want to do that? Well, at 65, I can retire and then I can do whatever I want to do.
Right.
And I want to teach people that you don't have to think that way, that 65 is an arbitrary number. Why wouldn't you get to the point where you can do whatever you want to do as soon as possible?
Right.
So I'm working with my kids. I'm hopefully putting a machine in place that allows you to use velocity banking, infinite banking, private lending, and other tools to get to the point where you can create a passive income stream as soon as possible, where you don't have to go to work anymore. And in these communities that we're involved in, I can literally show you 25-year-olds that have already achieved this. Now, these are second generation. Their parents have done this and they set them up, but they're literally have enough money to support themselves in passive revenue streams in their 20s. But that's definitely something that you can do pretty quickly. And so that's what I'm teaching my children. And I think where my passion is going to be to how do we get that message out to as many young people as possible.
So when you teach outside of the W-2, people kind of, stand back a little and they're like, that seems like a little difficult to start working for yourself and set up and, get your business established. And, I remember thinking it seems like a lot of work. Why don't I just go to work and do the W-2 and let them take care of the taxes, as far as just draw it out of my check? I'll do enough in so that I don't have to pay anything. I mean, the mindsets that go on and on and on and on, and they're all a lot of wrong mindsets if you want to be truly successful. But it's kind of like you just said, that could be used as a stepping stone while you're using PMC or whatever to be learning how to use your money from these places, can be invested and growing into passive income. Is that kind of where I hear you going?
Yeah, you can start anywhere. You can start, we talked before, where if you're 16 years old and you're working at McDonald's while you're in high school, there's no reason why you can't start using that little base of an income to get yourself to financial freedom faster.
Exactly.
If you start putting a couple $100 a month into something at 16, and you do that and you follow and build a machine that says, my goal here isn't to retire. My goal is to build passive income streams so I can do whatever I want to do. You can have those passive income streams up and running in 10 years. Guess what? You're 26 years old.
Right. I know, it's beautiful. It's a beautiful system. And I love the way the PMC is set up, because they mentor you. They actually show you what you can do with what you already have. I love places, like Chris Noggle and his business. They literally have mentors all the way through the infinite policies. I remember when I first set mine up with him, I get contacted, I think it was once a week when it first started, and then they back off to once a month or whatever. But I think that's awesome that they have people that will sit down and show you what it is that you need to be doing right now, if you'll just take the time to do it. If you'll invest some time in yourself, and just learn how this works. It's a beautiful, beautiful product that he's offering out there. Or is it a service? I don't guess it's a product. He doesn't sell
It's a
anything.
service. Yeah. Well, I wouldn't even say that it's a if a W-2 or not W-2, because I still now I get a W-2 from a company that my wife owns that I work for, but I still
Mhm.
get a W-2 income. So this is in addition to my W-2 income. And
Right.
having a W-2 income is not bad. There's some benefits to, because the other problem with not having a W-2 income because of our the United States and how we're set up, most people, when they look at you from a credit standpoint, if you don't have a W-2 income, they see you as self-employed, and in some respects, you are not fundable, which is so interesting. So
Yeah.
there's a lot of private lenders that will actually set up a lending company, and instead of just taking the money, they'll actually set up and pay themselves for the services that they provide their company, just so they can show that they have a W-2 income from a company. Which is, there's so many different ways to look at that model, but the key is to get to the point where you have enough independent streams of revenue to support yourself that if you didn't want to do anything today to make money, you could just take that in and do whatever you want to do.
That's awesome. That's awesome. So let's go all the way back though to the velocity banking. I had made the suggestion. I obviously had looked at your worksheet and I knew that you had the equity in your home. It looked like you had a 700 credit score and you were like, I'm going to go, see if I can qualify for this, which you did. Did it occur to you when you did that the equity in your home could be and would be used for these investments that you're making now?
Not at all. I was purely just at that point, I was just at the first level of velocity banking, and I was just seeing it as my debt tool. It wasn't until I went to Chris's team on the money multiplier side of what they do, and he got hooked up with one of their mentors, who's done this a ton of times and has actually worked with the same provider of the HELOCs that you do, and was able to look at what I had and like, okay, here's how we do this, and walk me
Okay.
through it, and I had the explosion when I figured out velocity banking, but then figured out infinite banking and then private lending and other revenue streams and creating arbitrages. I was like, I mean, I didn't think I had, I mean, I'll use some numbers. So I had $140,000 in equity in my house that I could go and invest, right?
Mhm.
Never, people are like, oh, I can't. Yes, you do. And they'll talk about the way that I like to talk about a HELOC is that's the other thing that we buy into in America, that you have to be a homeowner. So
Yeah.
I'll challenge you right now. You don't want to be a homeowner. Why do you ever want to own a home? I'm sitting
Yeah.
in a $530,000 house right now. That's valued at, right? This is a full first lien HELOC. And I will tell you that I live in a real estate investment that I have.
Okay.
So this is a HELOC, and I have some good debt on that HELOC and some bad debt. And the good debt is out making me money, and that's coming back and actually helping me pay down the bad debt. If you really look at how my cash flow works right now, I'm technically living, if I want to apply the math right, I live here for free.
True. I understand that.
Because the
Okay.
amount of money that I'm making and the investment that I have in the equity in the house is coming back and paying my mortgage for me, or helping me pay my it's not even the mortgage. It's just the simple interest on the loan on my real estate investment here that happens to be the house that I live in.
Right.
And it's so hard for me to get that past people. I'll talk to people like, oh, I don't want to do that. I just want to own my home. I don't want to have to worry
Yeah.
about it. And,
See,
and
I have the same problem because to me, I don't consider it debt. I mean, I consider it, I'm using the money in the HELOC to work for me. And thank God for the availability of your equity. But when I learned about even the PLOC, I mean, a $20,000 PLOC, would do wonders for getting you set up in the infinite policies. Now I'm funding another policy, so I'm up to 7 because it's so easy to do. Once you're in the process, it's like, wow. And that money sitting there for me to take loans on anytime I need it. I just can't even think of a better system to build wealth than through the infinite policies that you're doing, pulling back out, using that to fund your investments. I mean, a HELOC is not the only tool out there to help you start your infinite policies and do your investing. I think that the HELOC just allows you to do things bigger and better. That's the way I look at it. And like you said, a lot of people look at it as, well, I want my home to be paid off. I don't want any debt on the home. First off, I never let my HELOC get over 30 or 50% max because I don't want my home to be at risk either. But I mean, what will $50,000 do? If you had $100,000 HELOC, how is that going to set you up for the future? So like you said, you're gaining the passive income. You're not even making these payments that's the interest, into the HELOC anymore because your investments are paying you. I mean, it's just an exciting thing to me because I haven't even gone headfirst into doing the PMC like you have. And just talking to you encourages me to talk with the mentors there as well, and just let them see what they can do with what you have. And I think that that's why I wanted to bring you in here today, is to show people that you can start out in debt, you can learn how to use velocity banking to get rid of the debt, but you can also learn how to move into bigger and better things so that you're not sitting just dependent upon maybe working at a job that you absolutely hate. Okay. A lot of people are doing that. A lot of people are miserable. And I mean, every day I'm talking to people that would love to be able to do what they really want to do, that they were meant to do on this earth, but they feel like they can't because, well, I've got to make my house payment, I hear that every day. I would love to release people into a freedom that they didn't even realize they had. And I feel like that we've got some major tools here to push people into areas they never thought was even possible. I mean, did you think that you would be where you are today, and you're just, what, a year and a half down the road?
Yeah, it's a little crazy. So to be clear, so people get this, because I know if I was listening to this, I'm like, what are they talking about? So real quick math, my HELOC is at 7.75%. I've chosen that to be a fixed lien HELOC so that I know what that line is going to be. Now, out of the gate, they'll tell you to go variable, whatever. That's your decision. You can do that. My thought is if it goes down lower than that, I can always refinance my HELOC and go to the lower rate. But so that I know what my baseline interest rate is, I know. So regardless of infinite banking and going into a specially designed and engineered whole life policy, because that's something that you can do if you want. And this is you can decide to do this and work with somebody who knows what they're doing. But let's just say I'm going to take my HELOC money, right, at 7.75%. Remember what I told you that PMC, there are deals in there that range from 12 to 20%. Right. So I take that HELOC money. Yes, I'm paying 7.75% interest on that. I go and put that into a investment opportunity inside of the private money club at 12 to 20%. Let's say it's, 15, 16%. I'm making an arbitrage between that 15 and 16% and my 7.5%. And that's how I'm making money off the HELOC. Now, you can also say I can take the money from the HELOC. I can actually go in and buy a specially designed and engineered whole life policy. You can't get this from somebody other than people like the money multiplier or people who are certified in the Nelson Nash model, because a regular whole life will not work. You get that put in there. I have that policy. It's going to provide insurance for my children. So when I die, they're getting millions of dollars. Right. But what also it does is it earns 2 or 3% a year, plus it earns dividends about 2 or 3%, so about 5 to 6% interest. And I can borrow against that cash value without taking money out. So I take the HELOC money, it goes into the infinite banking policy that earns about 5%, 5 to 6. I take that out at a loan about 5%. So I'm still at a 1% arbitrage, but I get the benefit of the life insurance. Then I take that money, put it into the investment. The interest in the investment goes back into the HELOC. So it creates this thing. Now, here's the deal. This is playing with fire unless you are incredibly disciplined and you understand velocity banking and you understand your cash flow and you've demonstrated to yourself that you have the discipline to do this over time. So all that time that I spent from that 2016 to 2020 as I was doing, that was me building the discipline that I needed in my cash flow to know how this works. Then I was comfortable to do it. If you don't have that expertise or that discipline yet, building that muscle to do that, I would wait until I would go into the velocity banking and get your HELOC, and just so that you can get out of debt and use that as a tool. That's step one. Mm-hmm. Then once you're comfortable with that, then you start moving into these other opportunities.
Yes, because we do have spenders out there. Some people think, oh my gosh, I've got all of this money available to me. I'm going to go buy TVs and couches and,
it's like, oh, I'm not going to buy a car. And no, they'll show you how to buy a car using your infinite banking policy as a thing. Or I'm going to get my kitchen redone. No. Yeah, you can't do any of that.
I have those conversations every day, so I know how people think. So I am totally I don't even think about my HELOC unless I'm going to be, putting the money into something that's growing. So that is a great point. But I tell you what, I want everybody to understand that you are not an employee of the PMC. You're not, this is just a person that learned about velocity banking, found out about Chris Noggle and his team, and into the infinite policies, and now you're into the PMC. You're doing great. Your numbers look great. I'm just so proud of you and how you have just taken every concept you've learned in the last year or two, and you have run with it. And that has to be so fulfilling for you that you're to the point that you are now, and the sky's the limit. I mean, there's no reason that you can't keep growing and going. And I think that's awesome. And I think you are a huge encouragement, not just to the YouTube audience, but to myself, because I need to hear, that, people are jumping into learning how to use their money in a new way. And it's a very, very excellent way to allow your money to serve you. That's literally all we're teaching. So thank you so much for coming on today. Do you have anything that you want to add?
One thing to look into also before you go, and last little nugget, is realize that if you have individual retirement accounts, those can be rolled into self-directed IRAs. Find a custodial IRA provider. Horizon Trust is a great one out in California. They'll do this. And you can also start using your IRA funds to invest in private money club opportunities. With investing in things you know, like, and understand, and not as volatile as the stock market.
Yeah, so I'm glad you brought that up because I meant to mention that as well. I have a lot of clients that are sitting with these accounts and they're not doing anything. I don't even
Well,
know.
and they can go down with the market.
Exactly.
Where if you're self-directing, you can put those into things that aren't tied to the market and those fluctuations inside of the market.
Yeah, I don't like using the market either. We're on the same page. So I'm excited that you had time to come on here. And it was my pleasure to have you on, and just seeing that you are continuing to grow. I love that. I love that so much. I'm so thankful that you ran into the channel so you could learn about all of this stuff. And like you said, you know what? I prayed about my debt, my problems. Lo and behold, I believe it was the next day, about the velocity banking concept and how that completely changed my life. Was amazing. So I'm thankful that people all the way across the US, they're growing and they're finding peace. That's what it's all about. So I am
this is what God meant when he said, be a good steward.
Yeah, absolutely.
This is putting your talents to use. You have equity in your home that's not earning interest. Is that the best use of your talents?
Right. Right. And then going out and teaching other people to do it, that we're just here to help each other. So I am, like I said, I'm so thankful you came on today. I'm going to let you go because I'm sure you have 1,000,001 things to do, but it was a pleasure. And I absolutely hope that you guys that are watching this today, that you realize that you may be in debt today. But if you will just start digging, you just start looking at how you can use the things that you already maybe have set up. A lot of you guys come to me and you've already got a HELOC set up. You've already got a personal line of credit set up. You don't even realize the gold that you have, and you just have to start using it correctly. So I have a link below the videos, and you will see that it talks about the money multiplier, the infinite policies. When you see those links, it will take you directly to Chris and Oggle's team, and you are going to be able to learn about everything you need to know by clicking onto that link. He's going to have a 90-minute video that you must watch if you really want to learn how to turn your money into a money-making machine. Your income can work for you a whole lot better than it is right now. So Chris and Oggle's excellent with that. Go through that link. Also sign up for a consultation with them, and they will get you started. And you know what? They're mentors. A mentor is somebody that helps us understand where we may be missing it, and that's exactly what they were there for. So I hope you guys enjoyed this video. I hope that it brought value to your day so that you too could be in Brent's situation to where you are making money on top of money now. And it doesn't take that long. Like you said, you've been in this for about 2 years, I guess you're going on. And I think that it's beautiful. All of you guys out there, I hope you have a great rest of your week. I hope that you know that everything that I put out in these videos is just to help you come to financial peace, because I want to see you guys just full of joy. And thank you so much for the comments that I get every single day. Thank you for the emails. You all are so kind with your words and your appreciation. And that is all this channel is for, is to bring you some hope. So thank you for joining me today, and I look forward to seeing you in the next video.